Guys, today we've got an absolutely massive video. Bitcoin is pumping, but it looks like the financial system might be on the brink of something crazy. And a lot of people are saying that what is to come right now could be worse than 2008, could be actually one of the worst financial disasters in history. Guys, I have a lot of things I need to be showing you today. I do not want you to be on the wrong end of what's going to happen here. You can see that USDC is back towards $1. This is something we've been talking about, of course, how the market was overreacting, selling USDC at 85, 84 cents. So I hope that it was not a financial advice, of course, as always, but hopefully this was helpful to you if you were thinking about selling USDC at a very low price. But guys, today, just like I said, we are in the middle of a storm, in the middle of chaos, and I do not want you to get caught off guard. So I'm going to go through everything you need to know today so that you can make money and do the best out of this situation. So welcome back, everybody. My name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. Wow, let's look at this, guys. There's so much to say about Bitcoin, the markets, and everything right now, and I will do my best to clue you in as to everything you need to know right now. So yesterday, we saw a couple of things. So we saw, for the first thing, Bitcoin had a massive pump from the support level of my orange box. And guys, I'm still baffled by the orange box here holding up the Bitcoin price as the entire market was basically in complete meltdown. But anyway, orange box holding up the Bitcoin price here. After that, boom, saw a big pump up to, of course, the next level of the orange box here. At this point, we did see a decent rejection. We went down by 4.3% on these 4-hourly candles. And the questions were, of course, are we going to have some more upside, or is this the orange box we will be rejected at? Well, we managed to break through it. And of course, straight up to the next orange box. So this is why I'm gonna put a lot of effort into showing you these orange boxes and how to set them up yourself. Also, you will get access to these orange boxes. I am setting up that website, so you will get this. Just subscribe, activate the bell. I will let you know as soon as that's ready. But for now, you can see that we've gone into the orange box, got rejected 1, 2, 3, 4, 5, 6 times on the top here. But you can see that we are making higher lows, which is a good thing. Also, you can see that on this wick, we actually went up to the orange line here, got rejected. But this is still, like, if you just look at this, this is actually a bullish pattern, guys. This is consolidation after a massive pump right below resistance. This is something that, of course, we can expect. We have resistance. Of course, we're going to expect that to be resistance right here. But we have a big pump. You have consolidation looking like a bull flag. The question is, of course, when is this move going to be exhausted? And there's a couple of things to pay attention to here. One thing is that a lot of people are, of course, buying Bitcoin in anticipation for Binance. Actually, they have announced that they're going to convert $1 billion into Bitcoin, Ethereum, and BNB. So this is basically people trying to front run this move because they still haven't, from what I understand, they still haven't started to buy those $1 billion worth of crypto. But of course, the broader thing at play here is that the traditional markets are going down. The traditional markets are going down as Bitcoin is going up. And this is what Bitcoin was invented for. Bitcoin was invented after the crisis of 2008 because bankers screwed people over. Bankers screwed people over. The average Joe lost money. The average Joe lost money, not in absolute terms, okay? Not in absolute terms, but with the inflation, with the money printing, with the dilution, the average Joe got poorer after 2008. Okay, this is what happened. So Bitcoin was a way to prevent that from happening again. And Bitcoin has been doing a terrific job for the last 12 years. But right now, we are really seeing Bitcoin start to decouple. We're starting to see it actually fulfill its promise of the traditional system failing on the people and Bitcoin actually being adopted as a hedge towards that. Now, here is the thing though. This is a little bit premature still. It's just been a couple of days. We will see if this is going to last, but I'm hoping it will last. And if we can see that that's a paradigm shift for Bitcoin specifically, this is what we want to be on the lookout for. Guys, I will update you, of course, in regards to this. But the broader thing at play here is that we are getting closer to this white line. After this white line, inside of this teal box, which is a long period, but this is where the magic is going to happen. This is where we are going to see Bitcoin. And I think that after this green line, which is sometime in 2024, we are going to be at a much higher price than when we entered here at the white line. So this is on the weekly time frame. We have been talking about this for almost a year already. We were talking about us ultimately having swings to the up and to the downside, but ultimately going sideways until we go into this teal box. So this is exactly what's been happening. So everything is still according to plan. I am still intending on fulfilling that. I will enter into massive positions here at approximately at the white line. I do think that this crash here at 20K was not a bad idea to get in as well. As you know, I've been talking about buying if we were to come down, like when we were at these higher levels, if we were to come down to the orange box here at 20K, this would have been a logical point to start loading up on Bitcoin, which I've been doing as well. But here's the thing, the lower we are, I mean, if we do see another drawback for Bitcoin and we're getting closer to this white line, of course, the closer we are to the white line, the more I am going to be buying. And of course, it has to do with the price. The lower the price goes, the more I'm going to buy as well. So this is the strategy for traditional markets. You can see that traditional markets have actually been going down as Bitcoin has been going up. So this is the decoupling I've been talking about. Also for traditional markets, we do have a pattern unfolding here. So you do have something like that, like a broadening wedge. So we're keeping an eye on that. Next level of support though, this is like the make it or break it level for the traditional markets, as I've been saying previously, because this is 3,554. And if we were to break this and go down from this level, lose this support level, then the next one is really 3,717. So we're keeping an eye on this, guys. Massive things are happening. And now we got the TA out of the way. USDC is back at $1. This is absolutely wonderful, but we still have a lot of things to talk about because it seems like the financial markets, it's still over. This drama is still not over yet because regional banks, which are smaller banks essentially, which are more like many of them have been taking on too much risk. So one risk with the regional banks, if you look at Silicon Valley Bank, they had about 97% of unsecured depositors. What is an unsecured depositor? Basically, it is the money that is over the 250K threshold for every user, meaning that the FDIC are going to insure everyone with 250K, but everything above that was at that point, it was actually money that people were going to lose. And the calculation was that they were going to lose 97%. Silicon Valley Bank got shut down. The Fed stepped in and said, hey, we're going to make everyone whole, even if they are unsecured depositors. But the people who are not going to get made whole are the like the owners of the stock and the management and so on of that bank, which is going bankrupt, like Silicon Valley Bank. The stock owners, the stocks, they're not going to be made whole. Like the stock is going to be worth zero, so people were losing money. And now people are looking at similar banks who have similar risk appetite as Silicon Valley Bank and could have the same thing happening. So you have Zions, you have Western Alliance, you have a lot of banks going down just yesterday by 40, 50, 60%, which is absolutely insane. This is not crypto. This is not an altcoin on page 250 on CoinMarketCap. These are actual banks being traded on stock markets. For them to go down this much, it's basically people saying, hey, I do think that if we see the same kind of run as we saw in Silicon Valley Bank and in, what was the name of that other one, Silvergate, well, those stocks are going to go down to zero. So I'm not going to hold these stocks. This is why they're being sold off like crazy. But of course, we know that the Fed are going to step in and at least save the depositors. But they have set a precedent by saying that they're going to save people with Silicon Valley Bank. So the more banks, the more money they're going to have to put out. So this is something to be on the lookout for, which brings me to how we ended up here to begin with. Well, as you know, I've been talking about treasury bonds. I've been talking about the mechanics of how we actually ended up here and how people or banks were taking a lot of risk by buying treasury bonds with high durations for 10 years, 20 years. So when the interest rates got jacked up, and by the way, the Fed have been increasing interest rates at the highest pace in history. So this destroyed the balance sheets of the banks. They went bankrupt. So basically, this illustrates the point. For example, this U.S. Treasury issued at 1%, which is what they would get in 2020. The today's rate with 3.45%, it means that the $100 Treasury bill it would be worth only $83. So this is what is on the balance sheet of a lot of different banks. Their balance sheet is at a massive loss. So if people were to want to withdraw a lot of money, they have those stock in these treasuries, which they need to sell at a much lower price than what they're actually worth. And so that caused the cascade. Now, here's the thing. The Fed have stepped in and said that if you have a treasury bill worth $100, you do not have to sell it for $83. We will take that treasury bill, which is still going to be worth $100 just in 10 years. We will take that and we will give you liquidity. So this is like, it's still injecting money into the market, not by definition, but in practice, because what would otherwise happen is that this amount of money would basically evaporate. It would shrink the economy, which is, of course, what the Fed is actually trying to do. But the problem is that they do not want to see it on the cost of the entire system melting down and people losing money and the government getting absolutely destroyed and so on. So basically what you're seeing right now is that with the failure of Silicon Valley Bank, depositors start to flee to the safety of bigger banks who are too big to fail, and also money market funds and brokerages. And I could talk about this for like 2 hours, but I'm not gonna do that. It also has to do with the banks offering interest rates that are like 1%, but the actual interest rate by the Fed is 4.5%, right? We know that. So why were the bank offering 1% to depositors when the real interest rate should have been like at least 4%? Well, because they cannot afford to pay out 4% because they have bad debt. Basically, they've been screwing up their balance sheet. So instead of paying out what they should have been paying out to depositors, which is 3%, which would make the people stay at the bank, which is more healthy, but when people saw that, hey, I'm getting 1% in the bank, the US treasuries are offering 4.5%, why don't I just withdraw that and put it into treasuries? And this is what's also causing the run right now. People are just becoming more smart and they are more kind of in the nose as to how to earn money and such. And so, yeah, the banks think that we are all sheep. They think that we don't have information. They think that they can play us. Well, now people have started to say, no, we know what's going on. We want higher yield. And so the banks were collapsing due to that. As I said, I can talk about this for hours at end, but let's move on because we have something big happening today. We have the core inflation rate and the inflation rate coming out. Now, I do think that the forecast of 5.6% and 6.1%, I do think that the forecast is going to be correct. I do think that we're going to end up somewhere around this with the inflation rate coming up today. But the bigger question is, what are the Fed going to do moving forward? Because, okay, we're seeing depositors being bailed out, but at the same time, the reason why the banking system, or one of the catalysts for why the banking system collapsed is, yes, banks they made bad decisions, they took on bad strategies, but also the Fed has been raising interest rates at the highest pace in history. And that's why now people believe that 41% believe that we're not going to have an interest rate hike during the next meeting. 58% believes that we're going to have only a 25 basis point rate hike. So you can see how this changes very, very quickly with the sentiment in the market right now. And a lot of this is going to come down to what's happening with the stock market today. If we continue to see a free fall here in the bank stocks or the regional smaller banks, then I see it as highly unlikely that the Fed are going to increase interest rates at all. We could just see it remain at the same point in which it is right now. Also crazy, Nomura is actually not only calling for the Fed to pause, but for the Fed to cut the interest rates by 25 basis points, which would be absolutely insane. Because remember, we still have a big problem at hand here, which is the inflation. And yeah, the Fed still have to do something about that. And also what they said is that they're gonna halt quantitative tightening, which actually brings me to this. This is something I've been showing you previously. This is the Fed balance sheet. And here you have the projections. And the Fed balance sheet, you know that they've been saying that they're gonna roll off their balance sheet. What is the Fed balance sheet? It's basically stocks, assets that they have. And when they roll it off, it is like hurting the economy. It is taking out liquidity out of the market. So it's basically the opposite of printing money. This was the projection. This is a little bit outdated, but this was the projection that they are going to start to roll off their balance sheet, which was at $9 trillion. They're going to start to roll it off so that it's at like $6 trillion by middle of 2023, basically. Now, if you remember, I've been showing you this before. These were the projections previously. You can see the projection of 2010. They were projecting that this was going to be the balance sheet. Instead, went even higher. Here in orange, you can see that we're projecting that the balance sheet would go down to $2 trillion. Instead, it went sideways. Okay. Right here, they were projecting that the balance sheet would go, this was 2012, that the balance sheet would start to come down a little bit here. Instead, it shot up like crazy. Here, they said, okay, it's going to go up a little bit. This was 2013. Instead, it went up even more. Here, okay, they said that we're going to start tightening again. This was 2018. And they followed through that for a little while until right here where things started to go absolutely nuts. So what am I trying to say here? What I'm trying to say is that every time the Fed have been projecting that they're gonna now start to take money out of the system, to start tightening, it has only happened for a little while until they have to start printing money again. And the reason why is because every single time the Fed tried to shrink the economy, raise interest rates, tightening the economy, something breaks. Now we have something breaking. The banks have been breaking. The banking system on the verge of breaking. If this continues now, just like I said, short term, the Fed have assured us, they have given us assurances, but still we need to be on the lookout here. We need to see what's gonna continue to be going on here in the market. I will update you as always. But something always breaks when the Fed wants to do this. And now we've started to see this breaking point. So they have to take action. They have to either stop raising interest rates, they have to do something, or else something is gonna go absolutely nuts, which we're seeing the start of. So what else? One thing to pay attention to is that if we are in fact going to see a pivot from the Fed, meaning that they are going to stop raising interest rates, that they're gonna stop quantitative tightening, well, one key thing is that every single time in history, whenever they have stopped the tightening, we have usually seen the bottom about 3 months before the bottom. We have seen the tightening about 3 months before the bottom. So basically, the market could bottom at 3 months after you start to see that pivot. So if we can indeed assume that we're gonna see this pivot right now, that they're gonna stop raising interest rates, that would mean that we would start to see, the bottom and continuation to the upside in about 3 months, which ironically is pretty in line with this chart right here. And you can understand and you can see how everything that's happening in the market, when we look at the time frame here, things are making sense. But there's also another thing to pay attention to. It is that Bitcoin seems to a little bit decouple right now from the stock markets. So could we see something like the stocks continue to go down and potentially see a bottom in 3 months, and Bitcoin continue to go up? Just like I said, this is what Bitcoin was invented for. So that is definitely within the realm of possibilities, but the go-to case is still that if stock markets go down, Bitcoin is going to go down as well. But I hope that we're going to see that decoupling. Guys, before I continue and I talk about what's next and what you need to be prepared for, make sure to sign up for the best cryptocurrency exchanges out there. Up to $30,000 on Bybit, up to $50,000 on OKX. Guys, you will want to sign up to these exchanges because they're going to be exclusive benefits for everyone who are signed up to this channel. You're helping me. I am going to be helping you with putting out the best content and teaching you everything I know about the markets. Moving on though, as you know, we do have the CPI data coming out today. We do have Biden giving us potentially a clue as to what to expect. He's saying, I'm confident that the CPI will be in good shape next week. So this is what he said a couple of days ago. So of course, Biden already knows about these numbers. So did he kind of misspeak here? Well, he is assuring the market. So this is also why I think that we're most likely going to see the the CPI come in basically as expected. But as you know, I've been talking about this, crypto is under attack. The US is trying to kill crypto, causing collateral damage all over the place. Now, here's the thing. I posted this thread on Twitter. Make sure to go to my Twitter and read it if you want to know exactly about the different things that they are trying to do here to kill crypto. But this is not something that is a surprise. I've been talking about this for like 6 months already. And these are some of the key things the US have done just within the last couple of weeks. KuCoin lawsuit, BUSD Paxos lawsuit, Binance US Voyager deal, objections, they do not want to see that go through, Ethereum classified as a security by the New York Attorney General, also from Gary Gensler. It goes on. There's a couple, like taxing, 30% tax on Bitcoin mining. Absolutely insane. Kraken staking shutdown. You already know about this. The US are going after crypto, make no mistake. And we actually have something crazy happening here, because you know that Silicon Valley Bank was shut down because of the bank run, but also because they were serving crypto companies. The Silvergate Bank was also shut down, but in the middle of this, also Signature Bank was shut down. Now, why would they shut down Signature Bank? We have a board member actually saying that the reason why they took down Signature Bank in the middle of this was not because Signature Bank had troubles. It was because they wanted to make a statement. This is what they said. I think part of what happened was the regulators wanting to send a very strong anti-crypto message. We became the poster boy because there was no insolvency based on the fundamentals. So Signature Bank, this bank, was not insolvent. It was taken down kind of in a matter that was not, it wasn't warranted to take down Signature Bank, according to a lot of people and according to this board member. They were not insolvent. So why did the US take down Signature Bank? Well, they said like, oh, these banks, oh, they're risky, they're gonna collapse just like these other banks. So they took it down. But just like the board member is saying here, the main reason why he thinks they were taken down is because they were serving crypto companies. And you are starting to see this actually accelerate. Now, Binance, they lost their Great British Pound on-ramp also just today. It is going to be completely suspended in May. So Binance are losing every single fiat currency partner. So this is kind of something we need to be on the lookout for as well, because without fiat on and off ramps, it's hard for a crypto ecosystem to thrive. So we need to see this. So I hope that the US are not gonna be successful in trying to destroy crypto in Operation Choke Point 2.0. This is happening in front of our eyes, and I hope that they're not going to be successful. Apart from that, we also had a hack yesterday, which is very unfortunate, a DeFi hack, so not a centralized player. And with DeFi, we always know that there is that potential for a hack or an exploit. $200 million down the drain. Especially the timing as well. That's very unfortunate. Guys, a little bit of a longer video today, action-packed with information, of course. I hope that you enjoyed it. Thank you so much for watching, and I will see you in the next one.